What's up, guys? Thomas Feng with Bay Area Connect. Today I'm in Los Gatos talking with Celeste. Today we're going to be talking about some of the lending institutions that we have available to buyers. Most buyers coming into the home buying process, they actually don't know that there are different lending institutions. So today we're going to be breaking it down and letting you know the pros and cons of each. But before we do that, let me introduce, this is Celeste, and I'll let her introduce herself.
Happy to be here today. Thanks, Thomas. Yeah, there are, most people don't understand the various types of lending institutions that are available to them. And that's important because there's more than just the large retail banks. There are brokers and there are mortgage banks. For example, the large retail banks fund their own loans and underwrite in-house. That's an advantage. You've got brokers who have product availability across the board to choose from, including the large four retail institutions, and they can lend across the United States. Mortgage banks, on the other hand, they fund their own loans as well as can broker. So you have two choices. One is to go in-house with a particular product or choose a product outside of that particular mortgage bank. They also underwrite in-house and they have the product availability as a broker does.
Great. So for a borrower looking to get a loan to buy a home, the first thing you got to ask yourself is really, what are your goals? And a lot of the time, you look at a lot of loan applications. What do you think a lot of the goals are for a lot of these buyers?
I think most people don't really think of it in that respect. They don't think of it as, what are their goals? Why are they purchasing a home? And it's really important that you work with a mortgage loan officer who understands or wants to dig into understanding your goals so they know what product to put you in and for how long. Right.
For a lot of first-time home buyers, the average is about 6 to 7 years in a home. Or maybe you're looking to stay in a certain area for an extended period of time. These are all things that you should be letting your loan officer know so that they can put you in the correct product. So let's talk about the first one that we have, and that is mortgage brokers. Why don't you tell us a little bit about the access that they have to different programs?
Okay. First of all, mortgage brokers and mortgage banks, their loan officers need to be accredited on three fronts. One is they need to have the real estate license, they have a national license, and they also have to have a state license to work with the consumer. Brokers, again, have the advantages there are product availability. They can do loans across the United States, and they just have the ability to broker, period. Large retail banks, once again, they fund their own loans and they underwrite their own loans in-house. You are restricted to the products that they have to offer you in that given period of time. And then you have mortgage banks, whereby they have their own products in-house as well as can broker. They fund their own loans, they underwrite in-house, and they have a tremendous amount of product availability, much like a broker does.
Great. So the first two that you talked about, the broker and the retail banks, they have limited resources. The broker can use a lot of different programs. The retail banks, they have their own programs, so you're a little more restricted in that sense. What about the mortgage banks? It sounds like they cover a lot of the bases. Why don't you tell us a little bit about that?
The advantage, a mortgage bank, the differences are they create their own products. They can create a product for 6 months. Basically, their ability is they can outmaneuver the market much quicker than most in terms of getting the consumer products that they see there's a need for in that given time. And more importantly, they fund their own loans and do all their own underwriting. So they can do some more make-sense deals, if you will.
And all of these things that a mortgage broker can do increases your chances of getting a home. It makes your offer a lot more marketable if you can reduce the time it takes to get that loan approved. So that's also a great pro as well. But then again, with all these pros and cons, it really doesn't matter to you, the buyer, that much if they're not able to meet your needs. So that's probably the number one thing that we would recommend, is that you really talk to your loan officer about the goals and the things that you're trying to achieve, to see if they're able to help you with that. Is that correct, Celeste?
All right, just make sure you work with somebody who's experienced and the focus is on your overall goals, because that's where everything begins.
Well, thanks again, Celeste, for talking to us a little bit more about lending institutions and educating us about this.
Thank you.
Next week, we're going to be looking into another topic, and what will that be next week?
We thought about talking about the elements of layered risk as viewed by mortgage institutions. You hear a lot of what's going on in the press, but none of us ever really step back and take the view, if you're the mortgage bank lending the money, why do you look at things a particular way?
Right. So next week we're definitely going to cover this topic, and a byproduct of this topic is why are loans taking so long right now, and we'll definitely cover that next week. Again, I'll keep you updated on the real estate market in the Santa Clara County. Thanks for watching, and have a great day.